Thanks again for the introduction, and happy to come back here again and see Richard keep this thing going. And I really like this this event space is really nice with the nice carpet and the sort of the ambiance. But before I start, maybe I would ask everybody, the last few months, right, or actually at the end of last year, we had sort of like this huge bubble. And there was a bubble before that as well. And so how many of you believe there will be at least one more bubble in crypto? All right, so I'm happy about this because that's my conclusion as well. So yeah, obviously as everyone pretty much knows, we went through this kind of crazy ICO funding environment in the last year. That started actually in about early 2016 was some of the first major ICOs kind of started up, and then people realized, okay, this is like a major way to raise money for their different ideas, right? And as of the end of this year, it's really starting to sort of taper off. The market's really kind of, let's say, died out, and that sort of resulted in really bad ROIs for a lot of people who invested in the last year, right? This is all of the ICOs of this year, and as you can see, there aren't many of them. I think I printed this out a couple weeks ago, around mid-September. So as you can see, most of the ICOs, people have lost money, a lot of them because obviously they were denominated in Ether or Bitcoin or some combination of thereof, and so those have fallen precipitously as well. And so we're sort of like in this crisis mode, and but this is kind of a natural thing. And so 2017, what I came away with that, and what happened was that it was a record year for everything for the crypto space. Record amount raised, record amount of coins. The ROIs were insane for some people if you sold back in December or January of this year, and a lot more scams and hacks and that sort of thing. But we got also worldwide awareness. And there was, regulators started to pay attention to what we're actually doing and what we're up to and that sort of thing. And that's also a good thing that that's happening. China also banned ICOs, so that was a sort of interesting thing that happened middle of last year. And then the market just kind of kept on going, right? Because it's not dependent on any particular country or economy. The more important thing around that is that there was an ecosystem of solution providers and consultants that grew up around all of these ICOs, from technical advisors, audit firms, smart contract writing firms, marketing firms, and that's really, really important in the development of this space, right? Like, these people are not going to go away. There's a lot of human capital that's been developed over the last 2 years in us all collaborating together for these many thousands of ICOs that have come out. And so what I try to look at first when I look at what is the future of the market is look at the past, right? What happened in the past? And in the past, the first wave of ICOs that I was sort of participant of started in 2012, 2013 with Mastercoin, Ethereum, MadeSafe, a bunch of other ones. The important thing there that I find important, and that has happened twice now, is that the sort of willingness of people to take the risk and give Bitcoin or Ether for a new idea followed the Bitcoin halving. And my theory around that is basically that when the Bitcoin halving happens, the cost of the miners doesn't go down, right? If it costs you $2,000 to mine a Bitcoin, just because you're now getting half the amount of Bitcoins in your reward, that doesn't mean your costs have gone down. The costs have actually gone up for the amount of Bitcoins that you're getting. And so it forces the price up because miners are not willing to sell for a price where they cannot make a profit, right? So that forces the price up as long as something like Bitcoin stays like the dominant sort of thing in the space. And so that probably will continue to happen many more times, as I think the next halving is going to be 2020. So I would imagine there will be at least a pump following that. There was no regulatory oversight. The regulators didn't even know. Like, we were afraid when we were at Mastercoin. We're like, oh my God, the SEC or someone's going to come after us. The founder's going to get sent to prison. He's got like 5 kids. It's not going to work out well. Well, no one even, I mean, they didn't understand even what we were doing. So, you know, no one even just bothered us. Now, of course, there was all the regulators coming out with sandboxes, subpoenas, I don't know, 200 people or whatever. So it's a lot different this time, right? There was no book building and investment syndicates. What you saw in the last year was all these investment syndicates come out because a lot of people that wanted to get in on ICOs but didn't have the technical capability necessarily, or didn't have the time, or didn't have the negotiating power, they would band together into investment syndicates to participate in ICOs. And so that's like a further development that I saw this time versus last time, where it was like, you know, people that were very, very early innovator adopters. They were reading the white paper. They said, okay, the white paper's great, like Ethereum, for example, and we're going to put money into it, right? So this time you needed a bit more than that, right? So it's a little bit different, but I think there's some, you can see kind of how the development's happening from one wave to the next. And another thing that I look at, and so what I try to look at is like, okay, yeah, that's what's happened in our space, but let's look at a different space of what has happened in the past, right, in a different sector. And so a similar sector to ICOs and crypto is obviously technology sector of like software, hardware. And I really wasn't around back in the 70s, 80s, but I know about this. And you know, there were times in the early 80s where venture capitalists made a lot of money, and the PC was coming out, software was coming out, people finally had access to these machines that were only in big corporations or governments or universities, and so we saw there was like a pump back in the 80s, right? And you know, that is the lore that I learned when I was working with some folks back in Silicon Valley about 20 years ago, about this time when they were younger, that they had gone through. And so what we're seeing now, it reminds me of the stories they told me where, okay, one year there was like tons of money flowing through, people were going IPO, making insane returns, and then the next year, like, everyone's getting laid off. So it feels similar to that. And I think that that's an interesting thing. So if you follow what happened, was then we get to a stage in the year 2000 where there was like an insane sort of level of pump. And I don't think crypto has gone through this. Like, I don't remember how much this was, but it was like 6 trillion. And it only counted the US and maybe like some Western European, Japanese companies. So crypto hasn't even reached that stage. And that was the stage when the web browser had already come out. There was people using eBay. There was people buying books on Amazon. Yahoo existed. Like, not that everyone was using the internet, but most people had not only heard about it, but kind of had seen it or tried it out. I don't think crypto is even like, gotten to this stage. And then later on, after the dot-bomb, you sort of have this long tail where things develop. Stuff like Facebook comes out, Instagram comes out, mobile apps, and the internet becomes ubiquitous in people's lives, which, I don't know, like 20, 30 years ago, you may have not seen that, right? That it would be like that everyone's like sitting there on their phone, taking photos of themselves, reading the news, and trying to become an influencer or whatever. So, that's where it's gone in 30 years. It went from, 40 years, right? From early 80s, the first big computers that you could take home with you coming out, to now people on their smartphones, kind of like working. Some people are just making money by being Instagram or YouTube celebrities, right? They don't even have to have a job, basically, anymore. They could just take photos of themselves, which is, that's what it is. So no one would have thought that 40 years ago, but that's what it is. So, yeah, the internet obviously has hit that critical mass. We haven't, as far as crypto, and it's probably going to be a long, long time for that to happen. Like, if you think about that 40-year horizon, or yeah, from the early 80s to now for the internet, like, let's think about that for crypto. Like, what's going to happen in 40 years? right? I think what the cycles that we have to pay attention to are like the Bitcoin halving cycle, always going to help with determining price and more money flowing in, because like I said, as the price of Bitcoin goes up, people get extra cash, and then they want to diversify their risk, right? Because you don't want to necessarily, okay, I mean, there's a few of you guys here, but like, you don't want to keep all your portfolio in like, one basket basically. So if you break that basket, it's not going to be a good situation. So people generally try to diversify, right? And so if Bitcoin price goes up a lot, the release valve isn't necessarily to go back into fiat. The release valve is to go into like further innovation that's going to further the space. And that then funds the adoption waves, right? Because today, the way that, like, let's say Bitcoin works or Ethereum works, like there's a certain set of people that can use it and find it useful, but to make it more useful, you need new stuff to get funded. And so that drives the adoption waves, and then you kind of then get these sort of boom bust cycles from the speculation and that sort of thing. Another thing that I thought that could potentially lead to more sort of cycles and is how easy will it be for like things like Ethereum to scale? Because if you think about, like, for example, like media factor size, like again going back to like the 80s, if the smaller that the factor size of storage went, and also like CPU power, the more we were able to do with it, right? Like obviously I'm not going to carry around an XT computer taking photos of myself. That doesn't make sense. So that scaling, like when things get faster and things get faster or miniaturized, it enables new sort of applications that we weren't able to do before, right? So as that happens with Ethereum or the other chains, like what potential can we see around that? And even for like the Wings application, there's certain things that we can do on Ethereum, but it has its limits. Like there's certain things that we just can't do. It doesn't have the processing power to do it. So, if we can offload some of that onto like a Ethereum sidechain, Plasma chain, then there's a lot of other more interesting stuff that we can do. And then also new platforms that are going to be coming out that will drive some of those cycles as well. And so coming back to like, what is crypto going to look like in the future? And I tried to think of like 2050, which is only 30 years away. So it's like if Bitcoin came out in 2008, right? So we're like 10 years in, we have another 30 years. What is it going to look like? In my opinion, I think like the whole economy can, at least in the first and second world countries, can become tokenized. Like everything, as you were talking about IBM, working on these types of things with the supply chain and that sort of thing, and the sources of food and that sort of stuff. Every kind of information can become tokenized, and that's a really important thing because it allows AI systems to interface with those blockchains and sort of drive things and make decisions that we as humans can't really make because it's too much information for us. But if you can all of a sudden take in all this data that's out there, whether it's on private chains or on public chains, you can make a lot better decisions in how the economy works. And I think that we go from the fiat money is not as important anymore. Like it'll still function in the sort of old economy, but in the new economy, it's going to be incentive-based economies, right? Like Bitcoin is an incentive system. It's an incentive for you to, mine more Bitcoin basically and find cheap power to do it. That's basically what it is. And then when we have all these networks and different blockchains, like how do we coordinate them for the economy and for efficient resource allocation and getting things that we want? Okay, so I'll rush through this. So anyway, there's going to be a bunch more ICOs. Right now, there's obviously kind of a drought, but there's a bunch of stuff coming out. There's a lot of stable coins coming out these days. Gemini, I think, just announced one. There's Circle's got another one. There's TUSD. Government coins will come out. Asset-backed coins will come out. that sort of stuff. That obviously the utility coins are. I mean, that's like really the crypto bread and butter. That's going to be happening as well. And what we do at Wings is we basically provide a smart contract platform on Ethereum that allows people to evaluate, the crowd to evaluate new coins. Right now we just do it based on the valuation of the ICO, but we'll get into other types of ratings as well in the near future in 2019, as well as kind of building the infrastructure for things like book building and promotion, risk controls and governance and that sort of thing. So in our alpha, we evaluated 49 ICOs, and that raised close to $1 billion. And you can see that most of the forecasting actually was within like 30–40%. There's several outliers, but generally speaking, the crowd, even in this early stage, was able to actually get somewhat close to the actual number. And so with that, we have sort of a reputation system that we've developed, and it actually, what it's doing is it's sort of kind of keeping track of valuation and price discovery analytical capability, and then that is used to sort of tighten the standard deviation of the valuation. And later on, you could use that to sort of rate analysts and sort of see if you can trust someone or not as far as their analysis of a coin. And if you are a developer, our contract ABI is on GitHub, wingsDAO/ABI, and you can build apps around that. Like, for example, we do valuations of ICOs, but let's say you wanted to do valuations of paintings. The ABI is there. You can write a completely different interface into it. You can have people upload, I don't know, a Monet or Van Gogh, and you could sell coins for ownership of that Monet or Van Gogh. And you can ask the crowd of, in our case, crypto people don't know that they're not really experts in paintings. But you could, if you made the interface easy enough, you could go to a network of dealers and say, hey, everyone, we'll pay you a little bit of the auction fee if you help us value this particular painting or asset, right? And so that's the bigger vision of Wings, is eventually allowing the crowd to value things, and it doesn't necessarily have to be an ICO. It just matters that the people valuing something actually have some knowledge around that particular topic, whether it's cars, houses, paintings, or coins.
Dominik?
So, thank you.
Maybe we should ask the crowd if they have some questions to round it off. Thanks for that. So looking at the wisdom of the crowd, which you use in your platform to evaluate ICOs, right? You use crowdsourcing of knowledge, and you reward the people in the crowd. Are there any questions on this, what the Wings platform exactly does and how the knowledge of the crowd is used in the Wings platform? Are there any questions from this crowd, from the audience? I will not throw. I will give it.
Okay. How do you make sure that enough information is provided to do such valuation? Because what I see in crowdfunding projects, the amount of data, the amount of information is quite limited, which also limits to really assess what the value is, etc. How do you make sure that?
So the answer is we don't, and it's actually up to the individual forecasters to question those projects. Now the thing is, like, the system is still fairly primitive, so over time we think that people will develop. There might be standards around ICOs, for example, of what kind of information should be disclosed. But I know there's some people working on this type of thing, but it hasn't really taken hold yet. But for sure that will happen, I'm sure.
You mentioned diversification. Can you clarify? Because there's been 3,000 coins out there already. More than half of them no longer trade. What are you diversifying, and how should an average person diversify?
That is a tough question. So we have a foundation. The foundation does have assets. We have moved it over to euros and dollars earlier this year. There's still some Bitcoin and Ether there. But in our system, we don't have this yet, but one thing that we will be developing in early 2009 is for people to be able to ask the question of how much will this coin be worth in 6 months? Because it's one thing to do an ICO valuation, and yeah, sometimes when there's a lot of hype, yeah, it'll raise 50 million, but 6 months later, it's worth like nothing. So we want to sort of modulate that by asking the crowd, like, okay, well, it's great that you can tell how much the ICO is going to raise, but how much do you think this thing will be worth 6 months from now or 12 months from now? Again, like the data is still pretty early. The data set is still pretty early, so it's not like super accurate, but the idea is to at least start gathering that information. And the people that or the entities that participate in Wings, you know, technically we think they are people, but it doesn't have to be an actual human being that is doing the forecast and the analysis. So it could be like some kind of AI that's just grabbing data from all over the place about an ICO and then, you know, coming up with a number.
Okay, thanks for that, Dominik. There's a break later this evening, so if there are more questions, please pop by to Dominik. You will stay here, right?
Yeah.
The rest of the evening. And thanks for your introduction to Wings, and give him a big hand. And let's.